A business update now, circling back to a developing story where the European Central Bank has delivered a jumbo 75 basis point rate hike. That brings the main refinancing operations rate to 1.25%. It also brings the benchmark deposit rate above zero for the first time in 10 years. Well, ECB Chief Christine Lagarde just kicked off a press briefing, and Rosie Birch joins us live from Brussels. Now, Rosie, short-term pain for long-term gain by the ECB, which has front-loaded hikes to make a bigger impact on inflation rather than make gradual increases. Is this also almost certain to tilt Europe into a recession?
Well, that's the big question, and certainly fears of recession do loom over this meeting, as they do over this continent, with inflation now at 9.1% across the Eurozone. That's those 19 countries which use the euro currency. That is more than quadruple the European Central Bank's target, and that's why they say they've chosen this bumper increase in interest rates of 75 basis points. Now, it is their second increase since July. When they first raised rates in July, that was by 50 basis points. It was indeed their first rate hike in more than a decade. And of course, the goal here is to try and tame this runaway inflation, which we're seeing across the continent, particularly with regards to and as a result of the fallout of Russia's war in Ukraine, with gas prices soaring and households and businesses struggling under the impact of that. Now, the ECB's mandate is price stability, is to keep prices stable. So this is why it says it's moving forward with this rate hike. And the bank has signalled that more rate hikes will be to come. So they are expecting more rate hikes in the future, though they haven't indicated exactly when and how those will take place. This 75 basis point rise was higher than some had expected. Some expected another 50 basis point rise. However, it's little surprise to the markets, because there was a sense here that some sort of big intervention was needed, with the ECB seen as very much playing catch up. That first interest rate rise back in July was quite a few months after many other central banks around the world had already moved to act by rising interest rates. The ECB there is seen by some economists as trying to catch up, and now its credibility as an inflation fighter is seen as being at stake here.
Well, Rosie, meantime, the euro continuing to fall. Can this latest jumbo rate hike save it?
Well, the euro is certainly of great concern as well. We've seen in the last few weeks, first the euro tumble to parity with the US dollar, and then even fall below the value of the US dollar. That was for the first time in about 2 decades. So with this latest interest rate hike, the European Central Bank is trying to remedy that, is trying to give a boost to the euro currency. But as you said, there are still really mounting fears that a recession may be on the cards. When Christine Lagarde last spoke back in July, she said that a recession was not foreseen neither this year nor next year, but the horizon was clouded. Now, Lagarde is briefing the press as we speak and will likely give an update on that front. But certainly looming fears of a prolonged economic downturn here in Europe due to that fallout of the war in Ukraine, and of course countries scrambling to try and replace energy supplies that they had once relied on Russia for, and trying to make sure that they can keep the lights and the heating on here in Europe this winter, the winter approaching when the temperatures drop.
Many thanks for speaking with us, Rosie Birch, there in Brussels.